Hi, welcome to the Market Alert for Friday, the 1st of November 2024. So US stocks suffered amid tech weakness, mixed data and geopolitical fears, which are going to resurface tomorrow. It always seems to be the case on a Saturday. The war takes headlines in the mainstream media, so watch out for that tomorrow. Stocks hit by tech, crude soars on geopolitics while the bond sell-off continues. And other news, hunt for Red October over as earnings and inflation kill Goldilocks narrative. And while major indices ended October red, buying Trump and selling Kamala was a huge winner in October. And also not so much a winner for this woman. Treasury will be concerned as pound falls and borrowing costs surge after budget, according to the money section of the Sky News website. And just to show you the pound there, you can see there dropping off there. It's 325 pips down, but market bouncing a bit there. Depends whether it gets above the DP and then heads back down south. A bit like what happened with Truss, or whether they're going to try and support this, obviously, to keep this woman and this government in power. So we'll just have to wait and see, but keep an eye on the pound as well, just to see if it has a further sell-off during today. Let's have a look at economic news for today. We've got the main event, of course, which is the non-farm payrolls. These are released at 12:30 today, obviously because of the hour difference. As I mentioned before, everything reverts back to normal from Monday as the US put their clocks back this weekend. So non-farm payrolls are the biggie one today, along with the unemployment rate there. Right, let's have a look at yesterday and kick off with the Dow. So in the Dow yesterday, another drop there, down to the 41796. Support to the left there. The market's finding a bit of support. We came through the 89% retracement, so we can remove this. And prices showing an increase in selling over the last few days as well. This can become climatic, and then it just disappears. So now we've got this out, the UK budget out of the way. We've just got the US election on Tuesday, so expect more volatility going forward until that's out of the way. And I think it'll probably, if Trump gets in, goodness knows what's going to happen as far as the markets are concerned. But we'll just have to wait and see what the result will be on Wednesday morning. In the German DAX, market trading down to 89%, finds demand. You can see that there, 89%. So finding a bit of support. The market needs to get back above the 50 EMA if any chance of moving back to the upside again. A lot of uncertainty to come over the next few days, along with today's non-farm payrolls as well. Yesterday afternoon, you can see the German DAX selling off after the US opened. A lot of weakness came into the market. It's gapped up overnight. The gap's being filled. We're above the low at the moment. Market sideways, got support overnight at this psychological level of 19,050, the blue line there. But the market needs to get back above the 5, the 20, the 50 EMA, and then the close in the DP if it is to move higher. You can also expect the markets to tread water during this morning as well. In the S&P 500, the market also pulling back, trading below the 50 EMA, but trying to get back above this overnight as prices trade to the 78 and 89 level. Retracement there, 30-minute chart again shows the fall off after the US markets opened at 130, and then the climatic volume coming into the markets there where prices found support. And the low of yesterday has already been tested and prices are moving off this as well. Meanwhile, in the UK, they didn't like the budget first thing, market moving lower, but they did manage to bring the market back. But there is weakness there overnight at the moment, so let's have a look at that in a bit more detail. So there's the reaction to the budget. The market was brought back. Whether this is intervention by the Bank of England trading room, I don't know. But prices have stumbled overnight and still below the DP, so watch out for the low if the market does go down and retest it. And also keep an eye on. And speaking of currencies, this is bizarre. Looking at this chart, you'll see why I'm saying that in a moment. Dollar down for the last couple of days, up overnight, and yet the metals prices were hammered yesterday afternoon. So let's have a look at those and see what's going on. To start off with silver, market marked down $1. This is a shakeout in a new bull market. This is not as it was before, where they'll pump the market all the way down to 25 or anything like that. It's too strong. And what with Russia now buying silver as part of its central bank buying, it will be interesting to see if, and also, of course, the silver above ground is diminishing owing to demand. So it's going to be difficult to keep slamming this. That said, heed the warning. 130 today, as we had the down day yesterday. They may try and smash the price down once more today. So on that basis, let me just draw in some fib retracements, because they've got the non-farm payrolls. It's a good excuse to hammer the price down. So we could get down to the 50 EMA. If not, then that's a real positive. It's simple as that. 30-minute chart, LBMA fix, bang, down she goes, climatic volume, market's found support from there and is trying to move back to the upside. In the gold market, same picture. We're due for a correction, as we had one here not so long with the gold price. So this is manipulation and intervention by the banks to force prices lower, but you can see it's already starting to make its way back to the upside, which is a positive there. And no surprise, given the geopolitical landscape at the moment. So let's have a look at the gold-silver ratio. Well, this has moved up sharply over the last couple of days. The key here is the 186 level, if prices can hold at that point. We don't want it going through there, if at all possible. So again, keep an eye on that one during today, and hopefully we'll start to see a reversal of the gold-silver ratio there. Right, let's have a quick look at the trades from yesterday before my voice goes and see what happened. So yesterday, obviously, post UK budget, prices were sideways and we moved down slightly. There were no filled trades in the morning. You can see there we had a potential buy, but the market didn't fill it. Prices then moved up towards the 200 MA. Which is a shame that the order wasn't filled, and then you can see their prices banging its head against the 200 MA before prices then actually fell, and then we just get back into sideways there. We get above the 200 MA, but then prices soon becomes a bit of a magnet, and it's like a standard deviation line. It's moving up and below. And then eventually it gives way, which you'll see in just a moment. As it tries to move away, the market then starts to sell off, with the Dow, as we saw, falling out of bed. So prices moving lower there, signalled, and prices continuing down to the S2, before we then get into a sideways move where we just get scalp trades that follow. There's the first just up to the BRN and the 50 EMA. And then we've got a buy and a sell, but the buy is filled. So that continues up again to the BRN, the psychological level, and then prices just trading sideways to higher. So an interesting afternoon, to say the least there, given the budget. So we had the one sell signal that moved down, which you can see there, and then just the two scalp trades, or just above the scalp, if not break even, as prices traded sideways. Unfortunately, I wasn't at the desk yesterday afternoon, which is why the lines are still on the chart. Feeling a bit grim, but everything is fine and all is well now. So there we go. That's the market alert for today and for this week. So have a good weekend. Keep an eye on those non-farm payrolls at 12:30. And I will speak to you on Monday. So, as ever, thanks for watching. See you in the next one.